Hey, Ian, another edition of the Ian Cast, and I like the do, man. Nice
Yeah,
cut.
thank you.
Uh,
Yeah, I went for the buzz.
I think if we can get, maybe we can get the rest of our team to all join in.
Yeah, we might. That'll be
Um,
our identity.
exactly. So I've got my Bitcoin hoodie on. Actually, it doesn't quite have a hoodie, but it's close enough. And so let's start there, and then we can go to the markets and other things. But let's start with Bitcoin, because actually I've been having a lot of conversations with people about Bitcoin who are like, no, I mean, I put up this poll on Twitter. I don't know if you saw it. And you guys can follow us on Twitter. I'm at Mampilly Guru.
I'm at Ian Dyer Guru.
And I asked three questions. I said, when will Bitcoin make a new high? By the end of June.
Yeah.
I got a lot of laugh out loud emojis back in return on that one. By the end of July, by the end of August, and then there was a request for never, it's going to zero.
Yeah.
You're crazy.
Yeah.
However, you are the one to actually tell me that, like, in the last run in 2017, it went from, I can't remember the number, from 100, no, I know, from 1,000 to like 7,000 or something, like in the space of 6 weeks. It was like a huge run very rapidly.
Yeah, especially towards the end of that. It went from, I think, like a few thousand, like 4,000 or 5,000, all the way up to 20 in the span of a few months.
Right. I mean, but there's a log scaling to Bitcoin that's there that moved from 100 to 1,000, 1,000 to 10,000.
Right.
And so where we are is like where, so the halvings happened, the reward's been halved. I've seen, I don't know if you've seen, I can't remember on what site it was, that the fees are skyrocketing to verify the transactions, because of course the reward has been halved. And so a lot of the miners have gone out of business or shut down because they were never able to really generate something, their cost plus capital in terms of Bitcoin to sustain themselves.
Right. Yeah, and mining stocks are actually going up now. I've seen a couple that have made new highs for 2020, which is a good sign. People are looking outside crypto for a crypto investment because a lot of people are already in the stock market, so they look for investments there too. And those have a lot of upside too. And we've actually recommended a couple in the $10 million portfolio that are up. So those are looking really good too. Those companies that have survived the halving are going to do really well because they can still do their business even when they're mining only half the amount of Bitcoin.
Yeah, I mean, and so I mean, in some way, shape, or form, I mean, my general theory is that the longer people are forced to wait to buy Bitcoin when they enter their order in, the more it's like, oh my God, I need to like get in even faster,
Yeah.
which like extends the delay, which bids the fees up, which then like kind of pushes back into people coming to sort of buy even more. There's a sort of cycle of which is that people want what they can't have, and I believe that's true for Bitcoin. And we also have to say that, I mean, Bitcoin has, like, I mean, there was that move to 10,400.
Right.
And that looked to me like somebody getting in, like a somewhat large investor coming in and buying in block. And as a result, bidding up. Bitcoin is still got sort of variable liquidity at size, which is why I believe that it's so volatile. In other words, if you want to buy 1,000 Bitcoin, you're going to have to bid it up. And
Right.
It does look like the bid-ask spread is about $1,000 at the 1,000 block. That's just my feel. I can't tell you that I know this from sort of going and looking at the order books on Binance or knowing what the order book at Coinbase looks like. But that just, if you go and look at the moves, it's $800 to $1,000, and I'm thinking that once you get past 300 or 400 Bitcoin, you're forced to bid it up minimum $600, $800 to kind of wipe out that side of the book. And then equally, I'm sure there's people going short and they figure out how many Bitcoin they need to break it back down so that they're made whole. And that's just a very natural action of the market. And to me, that's actually an indication that there's more money streaming in.
Yeah, exactly. And like on Binance, which is the exchange that I watch because I think it's the most liquid for Bitcoin and pretty much all the altcoins. There's, 2 or 3 thousand Bitcoin traded per hour on average from what I see. So if you want to buy 1,000 Bitcoin, it'll take you a while because the sellers aren't guaranteed there. So that's what pushes the price up. And equally, it can push the price down if you get a big seller in, which is what we saw when it went back down below 10,000. And like really, it's held up really well since then. I think it's around like 9,700 still at the time that we're recording this, which is Friday morning. So it's held up well. I also saw that I tweeted out a picture a couple days ago. Maybe we can put that in here. That the number of Bitcoin that the exchanges own is like falling pretty rapidly, and that is, it started earlier this year, like a few months before the halving, because people were anticipating that the shortage that was going to be coming, and it's continued afterwards. So the supply is really running out, and fewer are being mined. So that's a really, really good thing for Bitcoin's price going forward, because you have that supply demand imbalance. And for the miners, Grayscale, that big Bitcoin investment firm, is buying like a third of newly mined Bitcoin. So it's going to be even harder for big buyers to get in now, because you have this huge institution buying a bunch of the Bitcoin, and making their own funds with it. So, it's really, the supply of Bitcoin is really being squeezed both from the halving and from additional demand from big institutions like Grayscale.
Well, I mean, you saw the last report. I think Square, through its Cash App, and Grayscale combined are absorbing more than 50% of the mining, the mined Bitcoin as of the last quarter. So, and there's nothing that Square is that the Cash App is necessarily doing to stimulate buying. People are just coming in, they're buying. So, and I have seen. I mean, I'm on the Grayscale email list. There's no sign of any let up on demand.
Right.
So if the reward is halved, demand's coming in, and the nature of demand is that once people start to do well, other people will want a piece of it. I personally, people think it's a joke that I put at the end of June. I understand now, with us being in the beginning of June, it's less likely that we're going to go past 20,000. Still, I feel that time frame is very reasonable in the sense that Bitcoin has never traded like a stock.
Right.
Yeah,
exactly. So like the last time, before or after the last halving, the price spiked pre-halving. I think it got to almost $2,000, and then it dropped down a lot. And when it went back up to that former high, which was a little under $2,000, if I remember correctly, it just didn't even budge. It just went right past it. So maybe 20,000 won't even be that big of like a resistance point. Maybe
right.
I mean, right past it. After that, who knows?
Yeah. Well, I mean, the models that are out there, and we've thrown out a price target or a goal of 100 grand by the end of this year, which again, we'll probably get a lot of interesting emojis back in return.
Yeah.
However, I've looked at that. What is that called? The stock to flow model.
Oh yeah. Yep.
Yeah. And then I've also gone and looked at all of the log models, both based on market cap as well as price. And it definitely does suggest that the next peak is somewhere in the range of 250, something in that range. 250, 270 would be the next peak happening if Bitcoin is going to sort of continue in one of those model types, which is, the stock to flow, or, one of those log normal sort of things, either based on market cap or on price.
Yep. And another kind of thing with demand is the futures market. You've got big buyers like Paul Tudor Jones and Jim Simons buying into that. Of course, those futures need to be backed by actual Bitcoin. So those futures companies like CME and Bakkt are going to be buying a bunch of newly mined Bitcoin too. So like the amount of newly mined Bitcoin that's going to like regular investors like us is a very small amount, but the demand is just going to keep growing.
Well, and there's, I don't know if you've seen, I think I put it up in one of our Slack channels. There's a company called Celsius out there.
Yeah.
That is where you can actually deposit your Bitcoin. And I believe they are charging 18% to lend the Bitcoin out and paying 4% or something in that range.
Yeah.
And so there's like all these new developments that are happening. And I forget the woman's name. She got $5 million in funding from very, established sources, including the pension funds of Wyoming, et cetera. Wyoming is apparently a very crypto-friendly sort of jurisdiction.
Yep.
To start a crypto bank. So, I mean, this is really rocketing off big time. There's also, in terms of the general crypto world, there was an article about the first Ethereum-backed mortgage contract that's out there.
Okay.
That's a development that I put Ethereum using a tracker into the Profits Unlimited portfolio. And if any of you are looking for America 2.0 stocks, which we're going to get to, or alternative ways to get at crypto without having to deal with a Coinbase account, a Binance account, what are the other main ways? I mean, the Cash App is super easy. So I would say that if you're looking to buy Bitcoin and don't want to deal with, funding a Coinbase account, which is very friendly and very easy to use. However, there's still some issues with getting money in. The Cash App is, I believe, the easiest way to buy native Bitcoin. However, if you just have a brokerage account, there is a way to own Bitcoin without actually owning the native Bitcoin. And the benefits of that are that you don't have to deal with the very complicated tax stuff that you would have to deal with. It is actually less volatile than native Bitcoin. From what I can tell. You just record for it like any stock transaction. And so I put the second crypto into the Profits Unlimited portfolio. And if you'd like to get in on it, well, click on the strong hands above. And that's going to take you to a presentation on blockchain. When you get into Profits Unlimited, you also get incredible, phenomenal portfolio that is annualizing at something like 22% or so per year. And we just passed our 4-year anniversary on this.
Yep.
22%. Yeah. We are beating out pretty much every hedge fund, destroying the market, the S&P 500. So if you want to get in on that, click on the strong hands above, crypto, stock, America 2.0 stocks, and just general guidance on the markets and things like that. Click on the strong hands above, and it will take you to a presentation that will give you an invitation to subscribe to Profits Unlimited, which, for the record, is about $50 a year in your first year. All right, Ian, having done that, let's now go to the stock market, because I'm sure you've seen that people are freaking out now because the stock market is going up. I saw an article, I think it was in Bloomberg, that said, even the bulls are completely mystified by what is going on.
Yeah, that's like stage one of a big rally. And then stage two is everybody, getting all FOMO, fear of missing out, and buying in, making it even faster. So I think we'll be back at new highs like really soon. I'm not worried about the current rally. The market dropped like 30 to 35% in a period of about 3 weeks, which has never happened. So I really don't have any worry that we'll be back near new highs. I don't think that this is like some crazy spike going on, considering we're still a few percent, like 5 or 6% below the 52-week high. And I've been adding trades in both the option services, call options, which benefit from stocks going up. So I do think that we still have a ways to go. A lot of our stocks in the American 2.0 portfolio have been making 52-week highs. So these are the stocks that are really seeing demand.
Right. I mean, let's just give folks a little bit of a taste and a flavor for the two option services. One is Rapid Profit Trader, and the other one is Rebound Profit Trader.
Right.
And just describe, Rapid Profit Trader, and I'll do Rebound Profit Trader in terms of like what we look for in trades there.
Yeah. So Rapid Profit Trader is basically momentum trading. So we want to see that stocks are making 52-week highs. There's clear demand for the stocks. They're in sectors that are in demand, and they're the leading stocks in those sectors. So there's, way more likely to continue to go up because people just continue to buy into them. not buying into a spike, but just buying into clear demand and a consistent stock making 52-week highs.
Right, and this is based on my experience of managing money. In other words, people build positions over time, and that's what drives that momentum effect. And we look to take advantage of that. And rebound profit trader is the opposite of that, which is that just like we referred to earlier, when there's a big block seller, you're not going to get the established price where somebody that's looking to sell 100 shares or 500 shares, they can get that price. If you want instant liquidity of a large block, well, you're going to take a haircut. It can be as big as 15, 20%. And then to the extent that there is regular demand for the stock, then it rebounds, and we look for those patterns in rebound profit trader. So if you want to check out those services that Ian and I run together, Rebound Profit Trader, Rapid Profit Trader, go to Paul Mampilly Guru. We have a list of all the various different services that we have at Bull Profits that I work on, that Ian and I work on, and you can go check it out and subscribe from there if you want to check it out. Now, going back to the market, Ian, I mean, it's interesting, that people have no issues with the market going down 35%, but people are unprepared, unwilling to accept that it can rise by that much in a similar period of time.
Yeah, exactly. Because, well, it's kind of strange, but people really didn't think we were at the bottom when we were at the bottom, although it had been the fastest market crash in stock market history. Yeah, and for some reason, even though the economy is reopening, even though the data is clearly getting better, and there's a huge shift in the technology that we're using, and a big acceleration of adoption of new technology, which is really good for any economy. People are still very, apprehensive to buy in right now. And like I said, that's going to turn into the fear of missing out, which follows a demand at higher prices rule, where people will pay more for something if it's going up. So I think this is really just going to snowball into the market, like I said, going back up to new highs.
Yeah, and I know every time we talk about the market, we always have the usual folks telling us it's just the Fed liquidity and all these things. And the reality is that the amount of money that is still sitting in cash is extraordinary.
Right.
So people, and you can go around the world, and people have negative interest rates going on. Interest rates are at zero. People are generally still. I mean, I don't. In the last couple of weeks, I don't know if I showed the article. It showed you that the vast majority of asset managers are skeptical of this rally, and
Right.
many of them actually have been selling into it. And I actually saw there's another YouTuber, I believe his name is Daniel Pronk, pretty smart dude, and he made a video yesterday and put it up, and which is worth checking out. And maybe we can put a link to Daniel's video. Saying like, hey, the market's going up. Why is Warren Buffett selling? And I feel like people have these false proxies in their mind. In other words, if Warren Buffett is not buying, hence everything's negative, something's wrong. If he's buying, the truth is that he buys also from a different perspective. He has an insurance company that generates funds that he puts money to work. He's got claims that he may or may not have to meet, which have a long tail. And for him, he also has to put very large amounts of money to work. And the one thing that you and I know about America 2.0 stocks is that because of like the way markets got structured over the last 20 years, where innovation, sort of new technology stocks largely were just like a tiny little slug. It's like FANG stocks. That's the only one. These companies are in many cases too small for the big money to own. This is a Main Street bull market. Like if you got a small amount of money, this market is for you. This market is for you.
A lot of the stocks that I've seen that are doing the best, making new highs, are like, the market cap, which is the total value of the company, is between like $1 billion and like 15 billion, which is not very big in the big scheme of things. A large cap, which is like the biggest big group of stocks, is above 10 billion. So that's barely even into that. And then there's a bunch of companies that are like over 100 billion, like the big banks, big tech. But there are these like smaller companies that are doing really, really well. And those are the ones that are growing very fast and seeing the most demand from the market. And they're still scarce. There's not a lot of new tech stocks out there, especially fintech. A lot of the new emerging technology companies are still private. So what I think is there's going to be a big surge in IPOs that's going to bring a whole new like amount of demand into the market for these new companies because people can't really buy into a lot of them at this point.
Yeah, I mean, which is why, we continue to be bullish, optimistic, positive. That's my hashtag that I created, invented, and I'm staying with it. And I understand that many people think that this is a Fed-driven liquidity. And of course, liquidity matters. However, I would tell you that the liquidity matters really a lot more for the housing market, which is just naturally strong. The Fed should be doing what it's doing. There is natural, actual demand that is out there that if did not have that liquidity going out, we would crash an economy that does not need to be crashed. There's no excess in our economy. There is strong housing demand. There is strong consumption demand. We have two generations, the millennial generation and Gen Z, which the housing data is insanely strong, insanely strong. It's really like almost unbelievable.
Yeah, mortgage applications now are actually higher than they were a year ago, which is kind of crazy because we just went through the whole lockdowns. Zillow and Redfin, the online buying platforms, are seeing huge surge in demand. One of them said that they had a 500% growth in virtual home tours in April because everybody was home. But the housing market is so strong that it's still seeing demand even when everybody is sitting at home, really unable to go anywhere. People are still buying houses, and there's a 2.5 million house shortage in the U.S. right now. So these home building companies have their work cut out for them for years after really taking a big break after the 2008 real estate crash. No demand for houses, so they just stopped building them. So they have years and years to make up for that. So this is going to be like a generational boom in the housing market.
And that's part of the America 2.0 thesis that we've laid out, which is that housing booms, the stock market booms based on technological developments, and as well as the rise of these two generations that come with their income, their spending power, and as they buy things to fill their houses and make up their lives, you're going to see the stock market rise. And as they have discretionary income, some of that money is also going to push into the stock market, which is, I believe that the other thing, and we won't really get to cannabis on this time, maybe a few minutes. The other thing that people don't know is that in March, when the markets were crashing, the vast number of folks that probably millennials, Gen Z, probably even some Gen Xers, they were opening up brokerage accounts.
Right.
E-Trade, Fidelity reported the greatest number of brokerage accounts ever opened in their histories in March of this year. Yeah. So that would tell you something as well, which is that the people are optimistic, and many people are like, well, Paul, that's contrarian. No, it is not contrarian, because the kinds of stocks that they're buying are scarce. They are valuable, more valuable than they've ever been, and they don't reflect the value of the technology, the utility of the technology. And now people have enough money to put them in demand, to bid them up. And I believe that's the market action that we are seeing.
Yeah, for sure. The retail accounts and like 401ks, there was a kind of an infographic or chart posted by Vanguard that showed that people's contributions like spiked at the beginning of this crash, and they just kept buying throughout it. So it's not even the big institutions that are buying into this. They're, for the most part, from what I've seen, they're bearish.
That's right.
It's the, people, everyday people that are really, really confident that the economy is going to rebound.
Well, it's the people that believe in America. It's people that believe in this country, believe that looking out 1, 3, 5 years, 7, 10 years, we are going to be stronger, better, technologically take an enormous leap forward. We have new industries like space. We've got new techniques like 3D printing. We've got so much going on, and that's not, Ian, to, in any way sort of say like, hey, are there things that our country can improve? Policing techniques, Absolutely. Could we be fairer as a society to each other? 100%. And,
Right.
however, these things are not mutually exclusive. Many people I'm certain, have sold their stocks watching what's going on in various cities. And I would tell you that it's important to just simply keep things in balance and in perspective. Those things can go on at the same time. What you do with your money, with your stocks, et cetera, that should really be unaffected by by those things, because there's never been a time of perfect peace, perfect harmony in our country ever. And there will always be something wrong. There will always be something that we can change and get better and do better at.
Right. Exactly. I think
All right. So
that pretty well.
yeah, and so with that, we'll do Tesla and cannabis next time on the Ian Cast. We didn't get to it. We usually get to it. All right, Ian, you go and say goodbye first, and I'll say goodbye next.
All right, everybody. Happy Friday. Have a great weekend. Everybody stay safe.
All right, this is Paul saying bye.